Hello, ladies and gentlemen, and welcome back to another session with Axis Mutual Fund. As you know, we try to meet you as often as possible and try to bring as many insights to you. Today, I have with me a very special guest, Mr. Sachin Relikar. He's a senior fund manager with Axis Mutual Fund with over 2.5 decades of experience. He's done an MBA from JBIMS, has been in the industry since about 2005, 2007. So he's an absolute legend. I don't think I can do the justice to introduce him, so I will hand it over to him. But before that, why are we here today? Right, so we are here to discuss with Sachin about the new fund offering we have, which is Axis Services Opportunities Fund. Why services? Right, I think that's the most moot point. We understand that there is a lot of the growth India has seen recently has primarily been because of services, where we've seen manufacturing is not at the level as it should be, especially with countries like China. So therefore, we've identified, and I think Sachin and his team have identified the opportunity to come out and have a presence in this sector. So that's why we're here to cover as many of these aspects as possible. But I think as a 30-year-old investor like myself, where this makes sense is you look at the overall index, look at the offerings within the index. So you have a lot of IT companies, you have financials, and you have my favorite, e-commerce, quick commerce, Horeca, hotels, etc. So I think it's quite it's not here and now, right? So Sachin, let's start with your views. What do you think? Let's go 0 to 1. What are thematic funds?
So thematic fund, so first of all, thank you for the very great introduction. Thank you very much for having me here. So starting with 0 to 1, let's look at the basic. What is thematic? There are a number of thematics, right? And so we talking about services, but there are a number of other thematics, like we ourselves have consumption as well as manufacturing as thematic. Whenever we are talking about this thematic, there are certain common drivers for a set of companies or set of businesses, right? And they go through a phase where a lot of the drivers are going through a very strong phase, and therefore there is a wealth creation phase around that. And I think if one can position in that from a medium to long term point of view, it gives a great boost to the overall portfolio allocation returns per se. And that's why you look at thematic. And way we look at thematics basically is we focus on broader thematics which are not just narrow in nature, or the addressable opportunity is quite large first of all, and they are broader, they are also long term in nature, and the forces which are driving are more structural in nature. So those are the three aspects which we try to bring together. And if we have those things, then the addressable opportunity becomes very meaningful. We can actually deploy meaningful capital also, and investors also benefit from that return enhancement as well as the diversification aspect of a thematic. So that's how we look at it. So we did manufacturing followed by consumption, and now we are thinking about this launching services. Each of these things you will find all the characteristics which I mentioned. So that's actually about thematic, and that's how one should look at. So what it does to the investor's portfolio is it brings in that special focus on a specific drivers or macro drivers which are at the play right now, and they are likely to continue to be at the play for meaningful period of time, maybe 3 to 5 years point of view. And then the drivers underlying are more structural in nature, and therefore that opportunity is to be leveraged upon. That's
Understood.
the whole objective.
Understood. So I think the way you described it is actually, isn't that closely aligning your portfolio with the India growth story, right? So you look at your macros, you have services, you have consumption and manufacturing.
Yeah.
It's only when all three of these engines fire does an economy, boost forward.
Yeah, actually, and you will find a certain set of businesses are quite homogeneous around that. There are a lot of adjacencies around this, and they also have those drivers specifically which are playing out very differently. At the same time, there is a natural tailwind for all those things, and therefore it is important to think about it, and it is important to position around that. And that's why, and you also rightly pointed out, these are something which are aligned or derivatives of overall India macro as a story, and we are just trying to figure out whether which is fitting where, and whether it is broad enough also.
Understood. And I think very interestingly, a few numbers we're quoting will be available in the product presentation, which is available on our website. So, Sachin, in our presentation, we've mentioned that the income as a service consumption as a percentage of overall GDP per capita income, we're at about 52%. right? And you look at countries like China, it's about 55, South Korea is about 55, 56. So what, as an investor, what am I supposed to understand with this number? How does this tell me where my money is going, or does this help me understand that, okay, since the overall economy is now firing, therefore this is the next runway for growth?
Yeah, so if you see the salience of services in any economy rises quite materially and in a steeper curve or steeper slope whenever the economy goes from a developing economy status to a developed economy status. And especially a country like us, which is passing through that phase of $2,000 per capita GDP or $2,000+ per capita GDP, you will find a lot of these aspects actually coming into the play in everybody's life. And even today you are seeing what your status was as an individual, as a household, maybe 10 years ago versus now. The involvement of services in daily lives is just gone up.
It's much higher.
It's much higher. It is much more intense. That is because there is also the propensity to spend has gone up. The cost of living has gone up, but at the same time the standard of living has also gone up because of the per capita GDP, which is what we're talking about. There's also urbanization trend. So we are getting surrounded and more intensified in terms of the service usage, and that is where why one needs to look at that aspect. And this is also a feature which you alluded to, China, South Korea. These are all examples where the countries have gone through this journey of a higher and higher per capita GDP income, and therefore the salience of service in that economy or in the lives of those citizens actually also gone up, and that is what India is also experiencing. So there is a template available, and that's how it has been fallen.
Yeah, and that actually makes a lot of sense, right? So let's assume, let's look at how our days have been till getting to office, right?
Yeah.
So you wake up, you have a service, say for YouTube, you watch the news for the day, and you hail a cab, say an Uber or an Ola, which is again a service. On the way you're hungry, so you'll order breakfast. By the time you reach office, that's being delivered by Swiggy or a Zomato, so that is again a service. And we're using, say, laptops, we're using the internet, again, that is an IT service. So we are surrounded by services, aren't we?
Yeah. So basically, if you see what is actually changing the overall life and what we consume also is driven through, or the reach of the entire services which are coming to you are actually driven through a technology penetration. So you will find the technology involvement is all encompassing, and it is actually taking a share of every activity or every sphere of activity which is there. It is not just about households or salaried people, but even for the students or everybody. So all the services are actually driven by this technology penetration, and that is actually enhancing not only the reach of the services but also the scale of the services or the varied nature of it. So those are the things which are actually driving, and therefore it is going to keep on intensifying only, and that's what we are all experiencing. Second important aspect which are driving services is there is a huge amount of formalization which economy is going through, right? There's a huge shift of unorganized to organized in terms of each of the businesses, not just in services, but services are actually that effect is felt more pronounced in services, especially for technology and formalization. And those actually not only, so they bring in more number of customers into the ambit, at the same time there are more number of services get offered, and businesses go through a huge amount of scalability journey, plus the profitability also improves. So there are a lot of these aspects which comes together. That's what makes the whole proposition very, very compelling.
Understood. So Sachin, I think now this is one query I think a lot of investors like myself have, that यार ये तो thematic fund है, तो बहुत risky होता है, बहुत concentrated bet है. So what do I tell an investor? So, or rather when our folks are watching this, what should they be aware about? Is it really that risky? While we understand that there is the flavor of the season currently is diversification, right? People are going broad, etc. But why do you think it's important for an investor to balance a diversification story with a concentrated bet? What is the right way to strike a balance?
So I think this is a great question. If you look at the entire wealth creation in listed space especially, and the two important structural drivers of that, I'm not talking only about services, but overall listed space, if you look at last 5 years since COVID or somewhat before COVID also, there were two structural drivers which are driving this wealth creation by and large in the entire listed space. One, which I talked about, is formalization, and another is technology. And this is something post GST implementation, the formalization trend has only accelerated over a period of time, because a lot of formal sectors or businesses which were in unorganized or informal things, they actually started formalizing. The share shifted towards the organized sector because of the GST implementation. All those things started happening. Plus, the quality of the goods, services, everything actually went up as the formalization improved. Then the acceleration or the J curve also happened as the mobile penetration improved a lot, personal tech improved a lot. At the same time, India's infrastructure quality of the technology delivery actually gone up, and therefore you are seeing a lot of these businesses are just because of the technology platform. And the large amount of wealth creation in the listed space is actually driven by technology and formalization. Now, if you see these two factors and what is actually getting driven into the services as per se, these are more pronounced in this. So when we are seeing, when you are talking about diversification versus concentration and why look at services, you are actually getting a very sharper exposure to these two drivers of wealth creation in services. And that is why that's why I'm saying it's much more compelling in nature to look at it. So if one were to position here, you will start understanding is one thing is these two drivers are not only driving a larger share of the pie, but at the same time the profitability pool is also enhancing a lot. Inherently, these companies also are actually kind of platform companies. There are a lot of network efficiencies which comes in, and therefore once they go through a phase where they are larger users, therefore they are larger suppliers, and therefore the economies of scale comes into the play, you will find the profitability also goes through a J curve. So those are the kind of opportunities which are there, and those are the kind of opportunities which are present in services as a overall basket, and therefore it makes sense to look at it in a specialized manner through a services opportunities fund. That is what our actually thought process behind it.
Understood. And I hope that sort of clarifies a lot of queries, because that is a real world problem that I think a lot of customers do face. And I think while Sachin, you were mentioning the growth story and how services are in fact here to stay, formalization, I think the most recent example that comes to mind is the I don't think we can name them, but there was a recent concert in Ahmedabad. This global band had come down, and I was watching a podcast by Book My Show, the founder of Book My Show, and he said that
Coldplay was there.
Yeah. So they created revenue for about 700 to 1,000 crores for the city of Ahmedabad in that one weekend. That's astronomical numbers, right?
Yeah.
Ahmedabad as a city, yes, it's growing, but if you compare it to a metro, that's a lot of revenue, right? And you look at the rub-off, right? So you have hotels, you have restaurants that are going to get a lot of revenue. You're going to have travel, tourism, flights, insurers, POS machines, ATMs, you name it, right? And all of these folks make a part of the overall services bouquet.
Yeah, certainly. So you mentioned all of it actually, and most of the things, while they look very large right now, but still if you see the share of that has a much big headroom to go up. For example, just about hospitality or the hotels you talked about, the overall organized hotel rooms in India per 1,000 people is the lowest in the world still. And we just saw, you talked about this concert, there's a Mahakumbh which happened, right? I mean, 60 crore people apparently reportedly has traveled to the place, and spiritual tourism is just something, is a new thing which has been recognized in India, and it's very, very specific to India maybe, but still so there is a need for hospitality, and there is a need for branded rooms, there is a need for organized rooms, there is a need for certain standard of hospitality services, etc. While the nature of the services which as of now offered is still very, very unorganized. There is not much like a sector which is there, while we know certain rooms are very expensive, but the amount of supply which is available versus amount of demand perhaps it can absorb, there's a huge gap, and therefore there's a long way to go on that also. And it's more importantly, it is also very employment intensive sector. It employs a lot of people, it employs a lot of youth also, and therefore it is in everybody's interest that grows, and it has a lot of other multiplier effects which you just talked about,
Yes.
which benefits everything. So those are the kind of things. I mean, I can go on. Hospitality is a similar case. I mean, just about 10% of the healthcare, rather, just about 10% of the healthcare service is actually organized only. So, and we know post-COVID, the kind of realization in people's mind about healthcare, all those issues which are there, and therefore we are seeing penetration of health insurance going up. But still, 10% is the only healthcare service which is organized. So there is a lot of scope in all of these things.
Understood. And that sort of does make a lot of sense, right? So do you not think, say, medical tourism is also just the tip of the iceberg? There is still a lot of...
So yeah, I mean, that's true. The whole, that is a big, big opportunity. In certain Southeast Asian countries, which are much smaller than us in terms of the size or in terms of the sector per se, because of the lack of scale over there, they have close to 25% or 1/4 of the revenues come from medical tourism. While in India that number is much smaller, and if the supply improves, the quality of the supply goes up. That also is an opportunity.
Right. Yeah, and I think I understand what you're alluding to. We've seen examples both in East Asia and in West Asia, where people go and they come back as different people, maybe spiritual or otherwise. And that is on a lighter note. But so we have a few questions also, so that a lot of our customers have already sent us. So let's go through a few of them and see what customers are saying about, or rather, what are their views about services, right? So we've mentioned about thematic funds. We've also mentioned about why it's important to consider services at this point in time. Let's look at the next point, which is if, say, we're talking to a 30-year-old investor who, for example, invests 50,000 rupees a month via SIP, right? And this customer has multiple SIPs. How do you think you would recommend, or how do you think services should form a part of their portfolio? Would you recommend a staggered approach into services, or would you think lumpy money is a better way to make the most?
So yeah, and this is again a very good question. I mean, if you look at 30-year-old, I'm just assuming that's the cohort we're talking about, which is having more than 15, 20 years of investment journey ahead, and he can actually allocate from a longer term point of view. And he can have I'm assuming being at that age in terms of the profile, then you have, since you have a longer term road ahead, you are really not have to be worried so much about the volatility in the near term, etc. And therefore your equity allocation can be substantially higher. So assuming, I mean, those are the clear asset allocation advice. And within that, if you want to look at services, I think the large part of your allocation can obviously go to the diversified funds, but services, instead of putting a number as to how much you should be putting in thematic, etc., but I think at least 1/3 or 1/4 of your allocation can be actually bracketed in all of these thematics, which are broad in nature, which I elaborated as whether there are long-term drivers of that. So that way you can actually structure your portfolio. But I think for a 30-year or that bracket, the long-term journey should be driven by equity, and within that you can actually position maybe 2/3 from a diversified funds and 1/3 into thematics.
Concentrated.
For sure.
Understood.
Just remember, in terms of choosing thematics, I gave you the pointers as to it has to be broader in nature, there has to be structural drivers, and there has to be long-term drivers in place. Right. I think those are all simple checkpoints one can think about.
Understood. And I think we've already discussed this, but just as a continuation to what you just mentioned, what do you think makes the services sector conducive, for this investment or this injection now? Where do you think we are? Say, out of 10, where would you rate India, in services? And what do you think is the runway for growth? Where do we go 5 years hence?
So, as we are talking about, we are, I don't know the exact number, but we are close to $3.5 trillion economy. We are across the $2,000 per capita GDP. And those are all pointers which will lead to, exponential or a delta sort of a growth in services, because that is what it will happen. What you have seen in last 5 years in terms of more pickup, more intensity of usage of services, and therefore more money, actually more share of wallet is actually going allocated towards consumption of services rather than products and goods. The same thing actually will accelerate much more. And as I told, the wealth creation drivers are playing out more strongly in pronounced manner in these places, because there is inherent capital efficiency which also comes into it because of the technology nature of the or technology intensive nature of the services.
Understood.
So from a long term point of view, and you will find a very meaningful allocation of the same set of companies also in the diversified bucket, because these are inherently high quality businesses with a long road ahead for the growth.
Understood. Now we've discussed we understand now that there is a runway for growth, etc. But let's sort of go a little microscopic here. What are the main drivers? We've discussed banking, we've discussed IT, etc. But what do you think is inherent in these businesses? Why do they form such a large proportion of the index?
They are, because their size is very large. Banking and financial services obviously is a very large portion of the overall listed part itself, because they are very large businesses, and they basically are drivers of overall economic growth also. So they tend to become part of, or a very major part of it. And IT services, we know, like India has a very large lead into that, and we are perhaps one of the most competitive IT outsourcing or IT services nation in the world, not just around to any region. So there is an inherent competitive advantage in that. So the profit pools are so large, they automatically become very large portion of the overall listed space, and so is the part in services also. But important thing to note here is there are two aspects rather. One is, if you look at the post-COVID, the profit pool within financial services itself has actually expanded much more strongly into non-lending businesses, right?
Okay.
Likes of asset manager, likes of broking businesses, likes of market infrastructure plays. Because what has happened is number of demat accounts have gone up like 4.5 times. The mutual fund investors have gone up by like 2.5 times. Not only just money or the SIP sizes have gone up, but the number of investors also gone up. Yeah. The direct demat account I talked about. The insurance penetration has improved a lot. Life insurance policies are growing at more than 12-13%. So all those things which are there, which are allied or adjacencies in financial services, they are actually grown much faster. Also the profit pool created or earned by these companies actually have occupied a larger portion of overall financial services. So that is a very peculiar thing which needs to be understood. This is financial services is not just about lending businesses, but also allied businesses. And we all know like how these UPI payments, etc., are taking like everywhere, right?
Of course.
So there are those things which are actually very dynamic in nature, and they are growing much faster also. Similar in case of IT services, country has moved much further from the traditional ADM services to now what product engineering, etc., which is there. And of course the technology is also evolved quite a lot over there. So that also as a service, IT as a service has become much more knowledge intensive, much more technology intensive, and therefore per employee productivity of all these companies also have gone up a lot. Yeah. The other aspect is basically, if you see, IT services are more oriented towards the exports, and financial services is more oriented toward domestic consumption. So there is an inherent diversification within the two. If India does very well compared to rest of the world, then domestic services will do far better, while if India doesn't do well, but it never not so much time of the case, but there is a diversification because of IT and financial services being together.
Understood. And I think another ripple effect of the IT services is probably the services used on a day-to-day basis, like entertainment, travel, tourism, hotels, right? These are all, the backbone is IT.
Yeah.
Right. And I think a very interesting stat, I remember reading about this. I think India has about 750 million smartphone users and about 800 million people who are on the internet.
Yeah.
Of which I think 3G coverage was about 450 million, 4G, etc. If you lump all of that, it's about 600 million. Those are astronomical numbers.
Yeah, right? Yeah, it's a big number, and that's what creates the market. That's why I'm saying technology reaches more number of people, and 75 crore people is a very large customer base, and you actually able to reach because there is a mobile telephony available, and there are business models which can be based on that.
Yeah, I remember I saw a recent interview by the YouTube India CEO. He mentioned that YouTube is not only an entertainment channel, but is the first screen most young students in small cities see, because it's an educational platform also.
Yeah, certainly. I mean, anybody having students in their home, they will understand how much technology is actually impacting the edutech per se. Yeah.
I think, Sachin, I think you've been very kind to answer all of our questions, but I think we probably have one last question and then we can close the session. But there are a lot of misconceptions also about services. We get to hear very often that, okay, we need to do more manufacturing, we need more hard products being exported, but we've seen traditionally what's grown us in the last 30 years has been services, right? So what do you think? How do you juxtapose this? And you've already answered this 2-3 times, but probably for the sake of repetition, what is the runway for growth?
No, I told you, like growth, the runway is, as we go through this journey of per capita GDP improvement, 3.5 trillion, we have targets of $5 trillion economy, right? If that were to be the case, then obviously the per capita GDP will actually go through even higher growth phase, right? And that will basically intensify the service usage a lot more. Plus, which you also mentioned, the technology, I mean the whole reach of the technology, that is actually making services more and more accessible. So the drivers are very strong, and they are perhaps quite easily understandable. So there is nothing like I need to really make a case for that. It is basically a case which is very obvious and strong enough.
Understood. And maybe we'll probably leave the audience with this. Maybe in 30 seconds, how would you, or rather, what would your advice be to, for the folks who are considering an investment in our services fund? What do you think? In 30 seconds, how would you summarize?
My only advice is take a long-term view of the situation. It's a very compelling and very structural in nature. Therefore, look at taking exposure from 3 to 5 years point of view. I think you will be actually much more, you will actually get a much more satisfactory outcomes by having a longer-term allocation. I think that is the main advice I would like to give it.
Understood. So with that, thank you, Sachin. Thank you for this session. I've troubled you with a lot of questions.
No, it was great talking to you. Very interactive. I think quite probing. Thank you.
Yes, so we'll bring Sachin back for another session very soon. For folks who are joining us virtually, our NFO opens on the 4th of July and will be open for 2 weeks. Please visit accessmf.com to learn all about the product. You will get collaterals like the product presentation, the leaflet, whatever data you would need to understand before you make an investment decisions are all available. You'll have a lot of content from the likes of Sachin and Shreyas available. And please, take an informed decision before you invest. And like Sachin has already mentioned, stay invested for the long term, and we'll see you soon.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.